after Ashna's narration on the KYC and what KYC requirements on onboarding of clients, I believe you may be thinking about how we can go ahead as far as the practicing is concerned. So I would like to give a positive thought today. So don't worry, every problem is a gift. So when problem comes, don't worry about that, but think positively. So I would like to start with a positive mind of frame. Without problems, we would not learn, we would not grow. So on this Saturday morning, I know that we all are here because of these problems or these issues. So with a positive mind of frame, then I would like to go into what are the red flags. So basically, red flags, as you know, these are not areas where we have to stop it. We just stop it, look at, these are indications. So on this red flags, we have to see, we have to take care, as Ashna explained, extra care, extra KYC, and then if you feel that it turns into green, then you go forward. So I would like to start with why money laundering happens. So money laundering happens, why? Because of the demand, and it is basically a pure economy, basically economics. It is a demand and supply. Suppose we have a wetland and we want to construct a house there. So legally it is not possible to construct a house. So we will look for an option. We may find out somebody useful for us. We may take our briefcase and travel to the capital city of our state, and we may find out somebody useful. And we hand over the briefcase, and we may get the permission for constructing our house in the wetland. So that is the normal things. And so he takes the briefcase from us, and we get the approval for the construction of a house in our wetland. So that is the same happening with the drugs, or it is with the gold smuggling and all those aspects. So basically, because of this, the bad money is being pooled, and so the money laundering, and then that is because of that, the requirement of the money laundering happens. So as this is pure economics, so there is a demand, so supply will be there, and accordingly, so money laundering. So this is a diagram which you have already seen quite a number of times, and it is already there. But just to understand, or just to brief, what is the process of money laundering. So our friend, by this time, who has collected not only one briefcases, he has now plenty of briefcases has already collected. So he has to, that is all bad money. Of course, he has to convert that bad money into good money. So it goes through this process, which you all are aware of the processes. So it goes into placement. When it goes into placement, there are different ways of doing it. The blending is there. Then blending means mix some bad with the good, like a milk vendor is doing. He will mix some water with the milk, and like that, this bad money holder will mix some bad with the good. That blending will happen. Then invoice fraud is happening. Then smurfing is happening. Smurfing you may be knowing, but because if there is a threshold or a statutory threshold, say for example, gold cannot be purchased, means to be reported if it is up to 55,000, then we may purchase up to gold worth 50,000. Or if there is a regulation that money cannot be deposited, cash cannot be deposited of 50,000. We will go and deposit 40,000. So basically, smurfing means we make it into, split it into small levels below the threshold, then carrying small sums of money abroad, like that. So different ways have been done for the placement. Then once the placement is done, it is layering. Layering happens when the perpetrator and want to keep as much distance from the generation part. So it is a layering happens, then offshore companies is being created, trusts are being created, then all those layering process happen, and ultimately integration. Integration is that the money comes back into in the form of dividend or in the form of rent from properties and all those things. So that is a basic process of money laundering which is happening. And because of that, this regulation has come, because the government has identified that professional money laundering is one of the main risks as far as money laundering is concerned. So to put a restriction on that, this regulations has come, including bringing the DNFBP. So under DNFBP, as you know, auditors are also brought in. So auditors under DNFBP means auditors in practice, independent practice, or the members in the practicing firm or employees in the practicing firm. And it do not cover those who are in employment, like person works in the internal audit under a company, suppose in the bank. So that is separately covered. So it's independent auditors are covered under DNFBP. So as Ashna explained, an auditor has two risks. His own risk as well as being a retainer, because his possibility to look into the client's aspects, financial audits, he's carrying out operational audits like internal audit, compliance audit, all these assignments handling. So he has to take care of the transactions of the client as well. So he is in the position of a sandwich. He has to take care of his own risk while onboarding the client or when handling the operations of the existing client, as well as since he has in-depth information about the transactions of the client, and based on the assignments, he may have to assist or guide the clients about the client's risk as well. So that is a sandwich position of an auditor, or dual responsibility of an auditor as far as an auditor is concerned. So so now I am mainly concentrating on the red flags. So red flags are, as I told you, these are the indicators. And when these indicators happens, you need to be cautious. You need to look into what is this red flag. As an engine driver normally do, he's putting his head out and see to the left and right and see what is the problem. And then if everything is straight, then he takes off the train like that. So the red flag indicators, one is on the entity or the owner. So entity or the owner means the person itself. Second is on the entity. And the third red flag is on the client's transactions. And the fourth red flag will be on the means of payment. And the fourth is of the choice of auditor and others. So I classified the red flags into these 6 categories. So in these 6 categories, we need to see what are the entity owner, as Ashna told, when we are doing the KYC, who is the UBO, who is the owner of the company. Suppose you may come across a situation where the owner is reluctant to share his information. He refuses to provide personal information because Ashna has given the KYC template, KYC format. So in situations, it may happen. He is reluctant to give the information or personal information. Then the information what is provided, if the auditor feels that the information provided is not correct, he has a doubt on that. So this is a red flag. So I have an experience. I got an audit inquiry, and the person entity is in one of the free zones, and he wanted to conduct an audit. So he said he's the old shareholder, the sole shareholder of the entity, and he has given the trade license and all. Okay, he's the sole shareholder and everything. And as a part of KYC, we have met, came to the office, we met, and all happened. But on the appearance, it doesn't look like he's the shareholder, but the trade license as per that he's the shareholder. Then we collected further details on that. But when we received the financials, further details, understood there are big amount of money received from somewhere and a big amount of money given as investments somewhere. But any of these aspects, he cannot give a proper information on that. At that point of time, we can understand that, okay, because then we understood he's an employee of the company. He's not the actual shareholder. He's a nominee shareholder. And so with that, we decided, okay, we should not go ahead with that assignment. So when we are getting information like that, they basically, now this is some situation happening. As per the trade license, he may be the shareholder or he is the sole shareholder of the company, but They may be, as you, it is nominee shareholders, or he may be just in the forefront. He may be an employee of the company, like that. So when going deep into that, you will understand that the information provided is not correct or it's insufficient. So accordingly, this is a red flag. Then he is reluctant or unable to refuse or explain who is the beneficial owner. Then what's the source of wealth and the source of the funds. So this is also not given proper information. So when these informations are being asked, and if you are not getting a proper reply, or if you feel that something is being hidden, then it is a red flag, and we need to go further deep into that. Then certain cases will happen. You may have experienced, actually. You want to see the owner directly, but the owner is not available, or it's always busy to have a meeting. And so he deputes somebody on his behalf. Or if it's now during COVID time, it happens that they cannot travel and they may be abroad. And when we are asking to come on Zoom, they may come on Zoom, but reluctant to put on video, like that. Different scenarios might have happened. So all these are indicators of flags. Then the second, so this is as far as the owner of the entity or the UBO of the company. Second is as far as the entity itself. So the entity itself, we might have come across situations where the entity is supposed to be, or from the initial information, they says that, okay, it is a big entity, or it has a multi-million transactions. It has offices in different territories, different countries. But surprisingly, we may be seeing that they are not anywhere present in the social media, or they do not have a website itself. Then we feel, okay, this is again a red flag. Okay, why such an entity? They says that, okay, they have multi-million turnover, they have offices in different places and all those things, but still why they do not have a website, or why they do not have presence in the internet or social media. Or again, you might have seen cases where in such companies, the email what they are using is just a Gmail or a Yahoo Mail or a Hotmail or anything like that, but do not have a domain name or a domain email like that. But it doesn't mean, again, I'm saying that these are indicators, these are just red flags. So if anybody is having only a Gmail, doesn't mean that immediately you have to report. But these are the scenarios where you have to look further into that. So basically, these are just an indicator that cannot demonstrate a history or provide any evidence, actually. Currently, they are showing big transactions in the bank, but when you are asking about the source, they cannot provide correct information about the source or demonstrate a history and such scenarios. Then the company name itself, the name of the company do not indicate the activity what they are handling. So you may have seen that it is a trading company, but the name says it is a service company, or the name do not indicate what the actual transaction is. Then the activities what it has in the trade license is different from the actual activity what they are doing. Again, we have a case happen that, okay, they were doing some real estate brokerage, or they are taking labor accommodations and giving it on rental and leases, and but when the trade license activity is totally different. And when we cross-checked about that, why they are doing like that, because these are again red flag scenarios. The activity what they are doing is totally different from the trade license activity. And an instance is actually the transaction. Basically, it is not cash intensive transaction. Their nature of activity is not cash intensive, but there is a lot of cash coming into their account. The cash deposits is happening into their account. So again, this is an indicator that you have to search further into the operation part and understand why. So I spoke about actually the UBO or the client itself, then about the entity itself. Then again, the third red flag is coming from the client's transaction. This is very important because as far as an auditor is concerned, you are getting more access into the transactions of the client and what are the transactions being taken place, and the nature of transactions. So based on that, you have to be cautious about the transactions what they handle. As I explained again, they involve large amount of cash. The transactions is happening in cash. You have to check about why the cash is coming, and you have to ask for the explanation and its source. Then involve multiple appearances of the same person. So the same person, when you're looking into the transaction, the same person is appearing in multiple transactions. The transaction with the same person, and again another transaction is happening. That same person is appearing in that transaction itself also. So this is again another indicator of you need to look further into that. Then borrowing and lending by non-financial institutions, because again we have and intercompany fund transfers. So this is again, I would like to say, you have seen the borrowing into the company and the lending by the company. If I say an example, what we have observed. If you see that the company do not have major commercial operations, but from the related entity, they are receiving huge funds into the company, and subsequently they are lending huge funds into their related entity. So, and they do not have commercial operations to the tune of these receipts and to these lendings. So the money is coming from a related entity and the lending to other related entities. So again, these type of transactions, when you observe, suppose it is already your existing client, but in their financials, if you observe such type of transactions, this gives a clear indicator or a red flag indication. So you need to further look into that. You need to see that. So you all extended KYCs and extended KYC, you need to look, all sorts of information need to be collected. And this is again another type of, when you look into the transaction, you might have seen that money has come from a related entity and the money parked in the company. And then after a couple of years, you see that, okay, this has been waived off. Money who the entity who borrowed the money and the entity who lent the money may be related entities or third party entity, whatever it be. But even if the amount is so big, they just waives off and the money is parked in the other entity. So such type of transactions also is again an indication you need to look further into, and it is a red flag and you need to stop and look further aspects of that. Then comes the means of payment, the way the payments are being done or the payments are handled. So the involvement of cash, that is a risk in all the aspects. So there is a payment receipt or payment of cash is involved. Nowadays, the transfer of cryptocurrencies are involved, or the transfers or receipts in some form of bank drafts or anything where the recipient's or the payee's name will not appear because the bank drafts or manager's check, so that the identity of the person who made the payment is concealed. So if your client is receiving payments in such ways, means the cash is received, or they are receiving in cryptocurrencies, or if you are receiving in any of these forms, the bank drafts or manager's checks or endorsement of third party checks like that, where you cannot able to identify who has made the payment, then again it is an indicator of it's an indicator where you need to be cautious and need to look into such transaction. This is another routine matter which you may be coming across in your daily professional life, that a payment comes from a third party different from the recipient of goods or services. This is something which normally happens, that okay, you are selling the goods to some entity in maybe in Africa, and the payment is coming from different, maybe some entities in the UAE itself, the payment comes from. When we check about why the payment is coming from UAE, then they say that, okay, there is remittance issues from Africa, this African country, that African country. You might have seen some daily professional life, you might have come across such situations. So this is an indicator. Payments come from a third party, different from the recipient of the goods or services. So again, this is then on the validity of the transaction submitted in connection with the transactions. So the documents submitted, the invoices submitted, or the transactions, everything, then loans granted, and they want to show it as a collateral. The loans granted, and they have on the basis of a collateral given as cash. So any loan given or loan lent and the collateral is given in the form of cash. So again, it is an indication. Then the choice of auditor. So a party approaches you to conduct an auditor, but when you look into the previous auditors, they have changed the auditor a number of times. Frequently, they are changing the number of auditors. So you have to see what is the reason for changing the auditors frequently like that. That is also an indication. Then giving unwarranted description of the auditor. Sometimes they comes and tells that my previous auditor was very expert on that, and they give a lot of description about the previous auditor. He was very strict, and they used like that unwarranted description about the previous auditor to give an impression that I am compliant in all the aspects. Otherwise, I would not have kept with that auditor like that, give an impression. But then when we are asking about the reason for changing the auditor, he may not have proper answers or logical reasons for changing the auditor. And then again, it is due to the fact that this refused to another auditor for a different time. Auditor keeps on changing, then unwarranted description about the auditor, and without any proper reason, he's terminating the auditor and going to another auditor. So this is again an indicator for you need to look into what the transactions involved. Then others. Others means then these are the general clauses. The client requests for shortcuts. They are asking to complete the audit in a short span of time. They may be approaching you to and say that, okay, I need to be submitted to the bank and I need to complete the audit on a very short span of time, or I need to submit this to a free zone and I need to be submitted. So basically, he shows a hurry in completion of an audit and not giving ample time for completion of audit. So such scenarios also gives an indication. Then the client itself comes and says that, can I make the payment in cash or in any precious metals or crypto or something like that? Again, that gives an indication. So all these areas, so all these are the red flags, which gives an indication. So, but this is not an inclusive list, as you know, and this will not cover it, but you need to show your prudence. So what are the challenges facing by the auditors? The main challenge is that these illegal organizations are continuously evolving and becoming more sophisticated. They are coming up with the more sophisticated ways, more sophisticated means. So we have to be very extra cautious because, as I explained in the beginning, professional money laundering is the main risk, and the money launderers are becoming more and more professional. So we have to be equipped in the same way to counter it. And the new technologies are constantly evolved. So because of that, as auditors in our profession, in our day-to-day professional life, what we have to do is never ignore red flags. So the red flags are not the red flag. These red flags, what I mentioned, are just a few indicators. We cannot have an exclusive list like that. But in the day-to-day life, when you are coming across the situations, we need to apply our logical mind, apply our prudence, and all the professional expertise what we have. And the main thing is never ignore red flags during the audit process because they are early warning. Then we have to think that the price of non-compliance is, you have to compare and think about the price of non-compliance than the cost of compliance. Because many people think that, okay, the compliance aspect is expensive, the compliance aspect is costly, but always think about the cost of non-compliance. So there are tools available for the world check, and there are, if you need expertise, then compliance officer, all these are expensive aspects, all these has cost money. But always think that the price of non-compliance rather than the cost of compliance. And finally, use our prudence. Always in our profession, auditors always use our prudence. So always use our prudence and see. And when a red flag is an indication, any red flag indicators you see, you will go deep into the transaction or deep into the client, look more into the client before accepting a client. That means that the onboarding process or the client is already onboarded in the course of the audit process and any other assignments what you are handling, whether it is an internal audit, whether it is a due diligence audit, any of the aspects you are coming across any of the transactions, then you have to follow the regulations as warranted by the regulation or DNFVPs and act accordingly, because the price of non-compliance is, and that's it. And thank you for the opportunity, and thank you.